Harry is an experienced home loan specialist with over 28 years experience in the real estate industry. He became part of the Cape Holding Home Loans in 2020, and Cape Holding Home Loans strives to provide innovative mortgage solutions designed for homeowners. Their services are free, can you believe it? And they shop around between banks negotiating the best deal for you. Today, Harry is here to give us valuable insight to home loans and how easy the process can be if you have all the right tools. Harry, welcome. Lovely having you here.
Thank you very much. Look forward to it.
So, why is it important to be pre-approved?
There are a couple of reasons. Firstly, I think it's very important that you set yourself up for success as a home buyer. I mean, can you imagine going and shopping for a Ferrari, but you can only afford a little Corsa Bucky? I mean, that would be disastrous. So as a pre-qualification helps you to understand what you qualify for, you also know how to manage your expectations and go and shop in the price range that you qualified for. Secondly, of late I've noticed a lot of times that there are more than one buyers vying for the same property. So I'll find an offer to purchase today from purchaser number 1. This afternoon, purchaser number 2 comes in with an offer. Tomorrow, number 3 and number 4 comes in with an offer. And all of these people are wanting that very same home. And when you're pre-qualified, we make sure that we've gone quite a way into the bond application process. So it gives you the advantage knowing that if you're able to get your suspensive conditions met first, very likely you'll close on the deal. And then, the other thing that's also important is that when we do a pre-qualification for a client, it's not just a matter of making the calculation of 30% of gross over 20 years at an interest rate of currently 9%. Yeah. Anybody can do that kind of calculation. But we then look a little bit deeper into the client's profile. So we look at their credit score. We look at their credit payment profile. We investigate the affordability, and you'll be amazed how many people say, oh, I can qualify for 2 million rand. But then when we look at that installment and all the accounts we have and all the credit cards we have, then we can't afford the installment on a 2 million rand home. So it's very important that clients arm themselves and set themselves up for success rather than failure. And I really do wish that more people would take it seriously, make the time, get the bit of paperwork together, and let's get you qualified.
The question I want to know, can I get a home loan if I have a judgment against my name or bad debt?
The $1 million question. So bad debt, and oftentimes clients will have debt that's been written off and they think, oh, that debtor has forgotten about me. Yeah. Lo and behold, when we draw your profile, it comes up. And the bank will not look at a home loan for you until that has been settled and paid. They want a settlement letter. Secondly, if you have a judgment, that's a little bit more technical, because oftentimes client will say it's an old story, it was a judgment that's been rescinded, or I've paid it. On the bureau, it will not be removed unless you have a rescission order, and a rescission order can only be obtained by an attorney. So if you have a judgment against your name, you have to appoint an attorney, cost you money, they have to appear in court, get the rescission order, and then that rescission order has to go to the bureau to remove it. And while any of these things appear on the bureau, the banks are just going to decline.
Sure.
So,
quite a whole process.
Yeah, without taking care of your debt, you're not going to own a home.
Yeah. So what type of interest rates can a buyer achieve when buying his first, second or third property?
Interest rates, at the moment, we're in an upward trend. So since 2 years ago, we were at a very low of 7. In 2 years, we've jumped to 9. And predictions are towards the end of 2023 that we could possibly sit at 11. And your interest rate is definitely linked to a couple of factors. Firstly, your scoring. So back to the bureau. Make sure that your scoring is good and healthy. Secondly, it's going to depend on your financial position. And if you're a strong applicant with a strong income and a relatively low debt service ratio, there's a likelihood that you'll get a good interest rate. Thirdly, it also is linked to the loan amount, and most people don't realize that. Yeah. So thinking from a bank's perspective, if they're borrowing you 100,000 Rand, they're going to make their pound of flesh out of you. If they're borrowing you R1 million, there's a whole much bigger amount of pound of flesh for them to earn from you. So in general, we do find that the higher the loan amount, the stronger the applicant, the better the scoring, the better the rates. And rates at the moment are very tight. I have recently seen a prime minus 1.5, but that was a rather exceptional client. Oftentimes, rates will be around prime or even slightly above prime. Scary thought, I had a recent client who had a rate of 10.15 when prime is 9. Fortunately, we managed to appeal and we got it down to prime.
So how can you achieve a 105% bond?
Glad you asked that, because a lot of people don't have the costs for the attorneys, and that is a rather big bill to carry and to pay at the end of the day. So the basic rule that applies to all the banks is you've got to be a first-time home owner. So if you previously inherited a property and that property was transferred into your name, you are no longer eligible, even though you didn't buy it yourself. So that's the first thing. The second thing is there's a couple of exclusions, things like vacant land, things like legal entities, but we're not going to run through that. Rather, let's look at which bank will give you what. The easiest one, and the one that probably approves most costs inclusive at 105%, is Standard Bank. Their cutoff, however, is at a loan amount of 1.8 million, and that includes the costs. So if we work the 5% back, your buyer should be, or your offer should be around 1.74. We add the 5%, that brings us to 1.8 as a total. And Standard Bank pretty much, if the scoring is in line, if the affordability is in line, they will pretty much do it for you. If we go to somebody like Absa Bank, they're a little bit more technical. So they're looking for the young professional, the young doctor, the young lawyer. And so their criteria is first-time owner. You've got to be under 35 years of age. You've got to have a 3-year degree equivalent of an NQF 7. And their cutoff is at a price of 1.8. So they'll add 5% on top of the 1.8 as opposed to it being included with Standard Bank. If we go to FNB, they recently amended their criteria and they go only to a maximum of R1 million. The lower your lending, they will go higher than 5%. But the one thing that's important to them is you've got to be main banked with them. If you don't have your bank account with them, they will not consider the costs for you. Nedbank is also on a 1.8 million rand cutoff. And pretty much they do very similar to Standard Bank, 5% included in the 1.8 million cutoff. They have a category called affordable housing, where if your income is up to a certain level, they may push the 5% slightly higher just to assist you to get those costs done. So costs are a very big part of my job. A lot of people need it. Oftentimes your rate at a 105 will be slightly higher. So people just need to be aware of that. But there's no reason why you can't achieve it. Again, depends on how you handle your credit.
And then how do I achieve 100% bond in a company's name?
So a lot of folk think that I can hide behind the company. Bottom line, you can't hide when the bank is looking for you. You will find that all banks will require the shareholders of the legal entity to sign suretyship. So even if you get it through the legal entity or the company, at the end of the day, if something goes wrong, they will come knocking at your door as the shareholder because you've signed surety for that bond. The only bank that really will consider 100% lending for legal entities without too much fuss, again, is Standard Bank. And that is up to 3 million rand loan amount. If it's above 3 million, they say they will still consider it, but it's up to credit discretion. And if you go beyond 5 million, that is really a matter of walking on water almost before they will consider that. FNB, for instance, when you want to apply for a bond in the name of a legal entity, if that legal entity is a trading entity, they will not entertain it. Nedbank pretty much needs you to have their business bank account with them, and then they will treat you as a self-employed individual, and they will consider 100% up to 3 million. ABSA makes a differentiation between main banked and non-main banked. For their main banked customers, up to 3 million rand bond, they will require a 20% deposit. Beyond 3 million, a 25% deposit. And if it is a non-ABSA customer, then your deposit requirement also applies, 25% or more.
Harry, thank you so very much. It was great chatting to you.
Thank you for your time. Appreciate it.
Cape Holding Home Loans work tirelessly around the clock, doing all the legwork to ensure their clients are getting the best services in the industry. The mortgage and real estate industries are not simple, which is why they work hard to stay up to date with the latest developments in the industry. Years of experience have taught them that risk prevention is the name of the game. If you would like to know more about what they do, visit them at capeholding.co.za or get in touch with Harry directly by sending an email to harry.forster@capeholding.co.za.